With Boeing, you have idiosyncratic risk. There's also general market risk. Do you play anything along those lines?
Yeah, I think anytime you see a company go through a situation like this, that's a quality business, if you have a great company with a one-time fixable problem, hopefully it's a one-time problem, then it does create a significant opportunity. You know, let the dust settle in this situation. If you really want to own the stock, sell some puts to acquire the stock at a lower price, and if it doesn't get down there, you just get to keep the premium. That's a way to potentially play this. But more than anything else, it is a worldwide story. I would agree with the gentleman before me. This is not going to go away as a demand curve. The key is what's the right time to get in and what's the best way to play it.
Michelle, as Alex says, there are some idiosyncratic risks here. Let's talk about broader market risks, industrials, for example, and how they're faring in terms of global growth, as well as U.S. economic growth, as opposed to other sectors.
Sure. So industrials are going to be highly cyclical. So they're going to be a function of what's happening not just for the U.S. economy, but for the global economy. And certainly at the end of last year and the beginning of this year, you've seen signs of softness there. The PMI surveys across the globe have weakened, particularly in areas like China, which has gotten the headlines, but also throughout Europe. And even here in the U.S., there was some weakening in December. Things have recovered a bit, but certainly there was some softening. And I think that's the theme. It's the cyclical parts of the economy that people are really focused on. It's the industrials that people focus on to try to understand where we are in the business cycle and how much more capacity there might be for further expansion.
An important driver for the United States has been housing, something you know a lot about. You come from that area. How is housing faring?
So housing has been slowing. It's been slowing. The data of late has been a bit mixed. So certainly existing home sales has weakened pretty meaningfully. I think part of that was because we had a big shock from higher interest rates in the fall. The stock market sold off, that weakened confidence, and that hurt turnover. So I think the numbers were extraordinarily weak as a result of that, and we should see some recovery into the spring selling season, especially now that mortgage rates are lower and home price appreciation is slowing.